Hello, everyone. I think we're just seeing some participants still stream in, so we'll give it a couple moments here before we kick off. But it's great to be back with you again. Garrick Heilman here to talk about the geopolitics of cryptocurrency. My earlier session for this course was on Bitcoin, and the questions are getting very, very good. This is, I guess, the third Web3 course I've taught on now, I believe, if I've got that right, Lambus and Andreas. But the quality of the questions are going up, and I do wonder how much of that is a reflection of hello, Ms. Ale. Thank you for saying hello. I hope I pronounce people's names correctly today. It's always bit of a challenge to get that just right. People mispronounce my name all the time, especially my last name. So if that makes anyone feel any better. But no, the quality of the questions have been going up, and I'm sure that reflects the quality of the students, not to mention some of the tools maybe that are out there that are assisting with question formulation. But the questions have always been very high quality in this program. Very impressed with the students at the University of Nicosia tracks to this, and I do enjoy keeping in touch with students on LinkedIn. But yeah, I think we've got enough people probably to kick off. We're going to start actually with a poll. You know, we're here to talk about the geopolitics of cryptocurrency. It's a very fun topic. It's very timely as well. We're in a very intensive geopolitical period right now, it seems. And the question we wanted you to think about and answer is, will the US dollar continue to be the dominant international currency in 10 years from now? So dominant global currency, international currency, reserve currency, these terms can mean slightly different things. While you're thinking about how you want to answer that, I'll try to address what does it mean to be an international currency versus a reserve currency. A really nice podcast, by the way, on that question itself, defining what is an international currency, that I highly recommend was delivered by Professor Barry Eichengreen from UC Berkeley, who is arguably the most preeminent economic historian. I did my PhD in economic history. Barry was kind enough before I even started at the London School of Economics to take time to meet with me. I was, a nobody who emailed him out of the blue, but he, took some time and we talked about the PhD. And anyway, huge respect for Barry. And he had a nice podcast with Hidden Forces recently that was on his new book, where he gets into what is an international currency, a currency that's used, for international trade beyond the borders of the nation that issues it. Reserve currency is something that central banks will hold in reserve as a reserve asset for balance of payments, trade settlement, perhaps defending a currency peg, and so on and so forth. So if you're interested in that terminology, recommend Barry Eichengreen's work in his new book and that Hidden Forces podcast he did recently. But the question is, do you believe in 10 years' time the US dollar will continue to be the dominant global currency? Today it's used in roughly 60% of international trade, maybe more than that. I think it's more like 60% reserve status. So when we look at central bank reserves around the world, 60% of their reserves are held in US dollars. I think international trade is even higher. That's underpinned by the petrodollar, the fact that US dollars are what oil is priced in internationally. If you want to buy Saudi Arabian oil and other Gulf oil, you need to do so in US dollars, although that's starting to change. As I understand it, Iran is letting some ships through the Strait of Hormuz so long as they settle in Chinese yuan, the renminbi. And I think India, China, Japan, a few others have chosen to actually buy their oil from Iran in the Chinese currency. So that's pretty relevant to today's topic. But yeah, have a vote. Will the U.S. still be number one in 10 years' time? Remember, tell us what you think is likely to happen, not what you wish will happen. I understand the dollar is not always loved, especially in crypto circles. But Andreas, if we've got enough responses, why don't we go ahead and close the poll
Yeah, yeah,
and
we are.
check out the results.
Check out this interesting result.
50-50. My goodness. I love it. That is as an instructor exactly what you like to see when you pose a question, that the class is split evenly on the question, because it means you're asking a good question that's not obvious. So that's wonderful. Thank you. Um, this result, by the way, some of you may remember, exactly matches, pretty much exactly matches the result I almost have always received when I've done my favorite poll question in crypto teaching, which is whether Bitcoin is money. And for over a decade, I've gotten almost the same result, 50-50, usually with classes. And Yeah, anyway, a topic that I was in Dubai a few weeks ago as a court appointed expert actually testifying on: does Bitcoin meet the definition, the economic definition, not the legal definition, but the economic definition of money? We're still waiting for the results of that court case. If you are really curious, you can go check out how I did under cross examination. It's on YouTube. That's right. The Dubai International Financial Court System does record videos of testimony. And I have to say that if you haven't been cross examined in a hostile way by a barrister, it's not easy. They're good at what they do. And check that out if you're interested in how I handled the pressure of a hostile barrister trying to trip me up on my views on this question of whether Bitcoin is money. But anyway, 50-50 people percent think the US dollar. I'd be curious if there's comments about strong feelings about this as to why you think the US dollar will stay on top. I mean, I think it's very fashionable right now. Like we mentioned, we're seeing the yuan being used for oil purchases in the Strait. We're seeing a lot of concerns about U.S. debt levels, and wars are not cheap. 200 billion is the current ask to fund the Iranian excursion operation. I'm not sure what we're calling it here. It's not a war. If you call it a war in the United States, you have to report to Congress, and that creates a whole host of issues. But the U.S. has a debt to GDP level of over 100%, is running multi-trillion-dollar deficits, and we're seeing a bit of softness in the employment market. So are the dollar's days numbered as the number one currency? I mean, Barry Eichengreen, just to go back to an earlier book he did back in 2010, right when I was starting my PhD, he thought the US dollar would be in about 10 years' time. So by 2020, a more diminished global currency than it was in 2010. And that's a prediction he got wrong. He thought the renminbi and the euro would take market share from the dollar, and that really hasn't happened. We're 16 years on from his 2010 prediction, and that book was called Exorbitant Privilege. And Professor Eichengreen got that wrong. Now, in Barry's defense, he often would preface his predictions on such topics with, "Hey, that's beyond my pay grade. I leave that to you, the hedge fund manager, the global asset managers, to make those calls." But he did go on record and made a incorrect call. And so I think the takeaway is even the very best of what they do can get these predictions about the timing of when a international currency will diminish, lose clout, lose market share wrong by significant margins. Um, yeah, the reports of my death are greatly exaggerated, says the US dollar and Bitcoin. Thank you, Lampus. Yeah, I don't think anyone's claiming Bitcoin or the dollar are anywhere close to dead, by the way, or at least I'm not sure of anyone credible besides, I mean, the usual Bitcoin haters who yeah, I guess there are some Bitcoin haters who do think that Bitcoin's on the ropes. I think a couple trillion in market value and 100 million plus users would beg to differ, but anyway. Um, Yeah, so let's dig into it. So, what is the future of global currency? How do currencies? I mean, how is crypto even geopolitical? I think is kind of a debatable question. Um, well, I think it's become geopolitical due to some recent events. This wasn't always the case. As you saw from my slides, some of us in the early days, all the way back in 2015, 2016, started to imagine a future where Bitcoin could be geopolitical, cryptocurrency could be geopolitical. I wrote a blog post, which I did talk with my PhD supervisor, Neil Ferguson, an outstanding historian who's hopefully going to get his volume 2 Kissinger biography out soon. It's been a long wait, Neil, for that volume 2, if I can say that. But I talked with him about this idea of cryptocurrency as a geopolitical topic and explain how I thought it would be interesting for China back in 2015 with its dominant share of mining hash power. It was the world's leader. Uh, its dominant exchanges. It had arguably more trading volume than any other market, a lot of users, to try to leapfrog the United States by not accumulating so much gold, but actually buying up this new asset, Bitcoin, digital gold, which already had a very powerful position to influence and lay claim to. And so, it was obviously pretty early in kind of thinking about that. I think it was I'm just going to share my screen here because I do want to touch on a few of the slides. Um, okay, here you go. Yeah, this is the blog post. So you can go on my website if you're curious and read it for yourself. But oh, sorry. Um, Looks like my recording popped up. But anyway, that's the blog post. And I kind of had a thought exercise about whether it made sense for a country like China to maybe try to embrace Bitcoin. And I think a lot of those ideas, I think, have held up pretty well, even though China has decided not to. And I think there's good reasons for why China did not um, take my advice. But there's interesting arguments for why they might have made a mistake by not doing so, and we see the U.S. actually really pushing cryptocurrency into the geopolitical arena with the decision of the Trump administration to create a national Bitcoin and crypto stockpile, not a reserve. I think there's a Bitcoin reserve and a digital asset stockpile, I think is how they're distinguishing it. Um, so I think the idea there was maybe the Bitcoin would be held longer term and other cryptos might be stocked and sold and acquired in various ways. And most of these Bitcoins, by the way, that governments have come to, sorry, uh, to to accumulate have come from law enforcement actions. So you don't even have to like go out and buy crypto, right, to get into the geopolitics of crypto. Even though El Salvador has done that, or countries like Bhutan, which have mined it and are apparently now selling it. So this has become a national topic, and some countries have kind of said, no, we're not going to be following the U.S. and El Salvador or Bhutan in accumulating Bitcoin. Some countries are rethinking their position, like Bhutan, it seems, by selling. And we'll see. We'll see if the U.S. Bitcoin stockpile survives a change in administration, assuming I'm just going to get out of these slides here because uh, it seems like the recording continues to wanna to play there. But we'll see how durable also the U.S. Stockpile is, right? It's one thing for one administration to come in and announce a new policy. It's a whole nother thing for the other side of the political spectrum to embrace that notion. And I think that's one of the key things I wanted to mention today was, you know, more so than at any other time that I can recall, I think crypto has become highly political and, was always controversial, right? There was always concerns about crime and so on. But I think the prominent embrace by not just the president of the United States, but his whole family, who are profiting in a major way off this industry, has politicized this in a way that has really, really potentially massive repercussions for the industry. It used to be funny back in 2013, you would see people from completely different sides of the political spectrum, kind of belittling Bitcoin or saying something negative about it. I remember noticing that on the one hand, you had Paul Krugman, the famous Nobel Prize winning economist and New York Times columnist, writing articles about how Bitcoin is evil. That was like the title of one of his articles. On one side, you had like Ron Paul, this arch libertarian Republican, politician, also blasting Bitcoin and strange bedfellows, right? But you see the Trump family profiting massively, in the billions, it seems, off their various crypto enterprises. You see countries like the UAE, buying billions of dollars of Trump's stablecoin on the Binance exchange, perhaps wondering what good that did them as Dubai continues to get hit with rockets and so on. Not sure that they wanted that, expected that, or feel like they're getting good ROI on their investment in Trump Influence Incorporated. So, but this has become very political, right? And so it's a different world now than it was a few years ago when you didn't have prominent politicians going so deeply into the industry and partnerships and profits and so on and so forth. And that could have, real important knock-on effects. So yeah, so that's kind of something I want to quickly talk about. So just a couple other things to set the agenda. And this is something I think we covered a little bit in the Bitcoin is it money, is it not money session previously. It's really important when you think about the geopolitics of cryptocurrency to distinguish between crypto asset, the idea of Bitcoin or something else as a asset, and cryptocurrency. So something that's more like Visa, payments networks, the US dollar, and actually used as a medium of exchange, actually used as a currency. Digital gold is an amazing result for Bitcoin. I think that's arguably what people see it as today, even though it trades more like a tech stock. Although we've seen gold also selling off, in this current geopolitical situation with Bitcoin, with stocks, they're all kind of trading together. So gold is not even holding up, I would say, well, in the current situation, although it did have a huge price run up and it could just be profit taking. It's always hard to kind of like, oh, this happened in the world, this asset should do this. But for a while now, Bitcoin is kind of traded more like a tech stock. Gold had a great 2025. Bitcoin had a pretty crummy 2025. Gold kind of did what it was supposed to do in an environment where there was growing concerns about indebtedness and inflation and such, whereas Bitcoin did not really deliver on the digital gold promise. So I think that that label is not even well established. But what is really clear is today, the vast majority of people who use Bitcoin and other cryptos use it as an asset, not as a currency. They're not buying their groceries. They're not paying for goods and services with it. It's why, in my opinion, Bitcoin doesn't meet the definition of money, as well as other national currencies like the US dollar, the euro, and so on that are being used for purchases of goods and services. So, this world where crypto just remains an asset or a commodity is far less interesting from a geopolitical perspective than this world where something, maybe like a stablecoin, maybe it's not Bitcoin, becomes actually a real currency, gets used for not just buying other cryptos and for trading in and out of positions on crypto exchanges and crypto markets, or playing around with DeFi yields and so on, but actually crosses over into the real economy, so to speak, and doesn't just continue to occupy this kind of corner of the digital economy called crypto, um, but actually crosses over into the real economy and gets used for everyday payments and currency. That's far more radical, far more disruptive than this just being a new investment asset class. And the jury is still out on whether cryptos, even stablecoins, can make that jump, right? We're seeing more and more signs that stablecoins might um, bridge the chasm into the real economy, and we see, you know, some good examples of that where, um, Stripe has made some big moves in this area. Um, there were some really interesting use cases, you know, and utility delivered by a company they acquired, a stablecoin company that was helping with international payments from Latin America, which is still challenging on traditional payment rails. So stablecoins right now look like they have more of a chance to maybe be, a payment currency in the real world. But I kind of push back on whether stablecoins are even crypto. Um, you know, uh, Gort, who runs the Gort podcast, one of my favorite crypto podcasts, which I highly recommend, I think she has the same view that stablecoins are kind of more like fintech than they are crypto. Um, so you can't really say, oh, stablecoins have succeeded as a payment currency, in my view, and say, oh, that's a triumph for crypto. Sure, these things run on crypto rails. They, are very much from the crypto ecosystem. But the stablecoins that exist today, which are backed by US dollars by and large, are really kind of more fintech products in my mind than they are cryptocurrency or crypto assets, which are more decentralized and trust minimized and censorship resistant and so on and so forth. They are not, stablecoins are not very cypherpunk, is kind of a tidy way of putting it. So I don't think you could say, oh, the triumph of stablecoins is like a triumph of crypto in the geopolitical arena. No, I don't think that's true at all. It'd be a half win, maybe. Um, but that's a another topic. But coming back to this topic of currency, this is really to me the big question. Can a crypto really become a medium of exchange, a currency like the US dollar, a payment network like Visa, and so on and so forth? And really, to do that, um, you've got to overcome a lot of objections, a lot of problems, right? But the biggest one I just want to quickly touch on is this one. It's the fact that most people don't get paid their salaries in crypto, right? Companies like the one I used to work at, blockchain.com, Coinbase did this as well. I think Kraken does this, a few crypto companies give their employees the option to be paid their salaries in cryptos like Bitcoin, but most people do not. And so that's a huge kind of friction to overcome. If someone wanted to start using a cryptocurrency as currency, buying groceries, paying their rent, and so on, even a stablecoin, they need to probably first get paid in it. Most people don't have the patience and time to go out and take that extra step of converting whatever it is they're earning their salary into a crypto. They're just going to spend on their groceries, um, on their rent, what it is they're paid in, because that's probably the currency or the coin of the realm, so to speak. You know, the butcher, the baker, the candlestick maker in your circular economy are all using this thing. Why are you going to go out, get this instrument that might, be interoperable, like a stablecoin potentially could at a point of sale terminal with the right debit or credit card? But why would you? Most people aren't that motivated to do that. There has to be really good incentives to kind of drive that extra step and deal with that friction of not being paid. So when you think about how successful crypto can become as a currency, not as an investment asset, but as a currency, you need to really focus in on this issue, in my opinion. How do you get people getting paid in the crypto? And there is, of course, a group that does get paid in crypto today for their work. Um, Machines, right? Machines that mine Bitcoin do work. They process transactions, they secure the network, and so on, and they get compensated in Bitcoin. And so, one way to imagine kind of this chicken and egg problem of who's going to get paid first in crypto to drive, the adoption of it as a currency is to imagine a scenario where the machine to machine economy becomes much more significant, with AI agents and so on. It's getting easier to imagine this. And when you want something from that AI economy, that machine to machine economy, just like when you go to France, you need to use the coin of the realm, the euro. You want something from the machine economy, you may need to use the coin of their realm. Maybe that's Bitcoin, maybe that's something else, right? That's programmable, digitally native, integrates with smart contracts that they're earning anyway from their proof of work hashing and so on, et cetera, et cetera. So I think that's one of the more promising kind of sci-fi imagined scenarios for how you deal with this chicken and egg problem of crypto becoming a currency, not just an asset, right? And there's a lot of reasons to think, it may not make it, right? There's a lot of history. I wrote a paper about this of alternative currencies that were interesting for short periods of time, but die eventually. And for various reasons. And we can talk more about that if you're curious, or if you want to go read that paper. It's called uh, the history of alternative currencies, I think, is the main headline title. But this to me is the key to crossing the chasm from asset to cryptocurrency. And then once you're a currency, I think you can become much more geopolitical. I don't think central banks even holding it in reserve makes it all that super geopolitical, honestly. Like if you saw other countries starting to follow the US and just say, oh, we're going to invest in this and hold it as an asset. Okay. Well, there's, other assets, but are they settling debts with it on an international basis? Um, are they trying to, position their economy to be more crypto friendly and have more mining and hash power, to have more influence over the network? That's where things start to get, I think, more geopolitical than where they are now. I mean, we're already there. This is already a geopolitical topic. I'm not saying that it's not, but it still is in the early days, I'd say, of crypto becoming geopolitical. And, to some degree, this is going to have the trajectory of this is going to be obviously influenced by the question we opened the session with about what is the future of the U.S. dollar. Right now, stablecoins, in stablecoin land, the U.S. dollar has 99% market share. Actually, far far more market share than the U.S. dollar has in reserve currency land, reserves held by central banks, or even international trade. Right. So for those who think the U.S. dollar has a strong chance of staying on top in 10 years, I would say one of your strongest arguments is that if the future of money and currency is going to be led by stablecoins, then boy, the dollar looks even more dominant there than it does in other arenas. The network effects are, some of the strongest we've ever seen in technology and money, right? And money fundamentally is about network effects, right? currencies are only useful when we all decide to get on the same bus and ride that same bus together, right? That's what makes it frictionless to transact with each other, is that enough people have agreed that they want to use this same thing, be a part of this network. And so that's why, Barry Eichengreen's prediction about 10 years' time, the US dollar maybe being dethroned. That's why the British pound, even after World War II, is an important international currency for decades after the British Empire had really largely vanished as we knew it from its pre-war state. Currencies have long-lasting network effects that can be very, very hard to dislodge, even when the issuing country is diminished. The U.S. after World War II was 50% of the global economy. It's down to, I think, less than 20% today in terms of its market share of global GDP. And yet the currency is still at 60, 70 or more percent of international trade and reserves, right? So the currency is held on, even though the economy is shrunken relative to the rest of the world massively. Okay, so that's what I wanted to cover in terms of kind of high level material. We've got some questions that have come in advance. Thank you for submitting those. Let me go to those now, and I look forward to seeing other comments and questions in the Q&A as well. Okay, first question, Paul. Does cryptocurrency adoption enhance financial sovereignty for developing countries or expose them to new geopolitical risks? Yeah, this is the El Salvador question, right? So El Salvador, before it adopted Bitcoin officially as legal tender, all right, that was a legal, by the way, adoption of Bitcoin. That was not an economic adoption. All right, so this Dubai court case, just to go back to that briefly, because I think it illustrates this very important distinction nicely. It's one thing for a country to say that something is money from a legal perspective, like El Salvador did. It's a whole nother thing for it actually to become widely used in an economic sense as a medium of exchange or store of value or unit of account, which did not happen in El Salvador. So the government said, this is legal tender. We're adopting this. We're even going to buy it. But they were not successful in getting the people to use it as money, right? They said it was money, and you could go to, I saw people doing this on social media, going to McDonald's in El Salvador and buying their Big Mac with Bitcoin, right? But that by and large did not happen. And so, it's a really, really good example of how you can say something is something legally, but it fails to become money economically, right? That was the question I was asked to testify on in Dubai, was the economics of whether Bitcoin was money, not the legal status of Bitcoin. I'm not a lawyer. So, to Paul's question, does cryptocurrency adoption enhance financial sovereignty for developing countries or expose them to new geopolitical risks? Well, I think it could do both, right? And we saw El Salvador get a lot of pressure from the IMF as a result of kind of coming out and adopting Bitcoin. I think the IMF had some legitimate concerns with El Salvador's adoption of Bitcoin. Um, let's not kid ourselves here, all right? We know crypto assets like Bitcoin are used by bad guys, right? Just like US dollars are used by bad guys. Supposedly, the vast majority of $100 bills are offshore in places like Argentina, Mexico, and elsewhere. A lot of them have traces of cocaine, I guess, on them. Um, Bad guys use lots of things, but they also use crypto. And if you created a legal tender status for Bitcoin in El Salvador with ATMs and banks processing Bitcoin conversions into dollars and so on, because El Salvador was and is on the US dollar. It's dollarized. It's adopted the US dollar as its official currency, like other countries like Panama, Ecuador, Zimbabwe, and so on. You could see you can imagine, let's put it this way, and I think this is what the IMF was partially worried about. You could easily imagine a money laundering operation at scale taking off centered around Bitcoin conversion in El Salvador. So, countries like North Korea, this is another geopolitical dimension, right, that we don't emphasize too much in this session. But countries like North Korea have been very successful at uh, crypto heists, right? There's a great BBC produced podcast called The Lazarus Group. If you want to dig more into how North Korea is so good at hacking crypto, check that out. They are a formidable adversary when it comes to cyber attacks and stealing crypto. I mean, they've stolen billions, right? But the nice thing in some ways about crypto not having crossed the chasm into the real world is it's still relatively difficult for bad actors to take their crypto and use it in the real world. Um, it's becoming probably more easy to do that. We're also developing more sophisticated tools for tracing and tracking down the bad guys, and we've had a lot of success with law enforcement actions on smaller time hackers, the Bitfinex hackers, and so on and so forth. Silk Road hacker. That's how the U.S. got a lot of its crypto. But um, nation states, they still have to figure out how to convert that Bitcoin, that ETH, that whatever they stole from the South Korean exchange, the Japanese exchange, et cetera, et cetera. A lot of Asian exchanges seem to be hit by the North Koreans, by the way. Um, Pro tip there, not investment advice, but just think about that as you're thinking about where to put your crypto. Um, and you know, if El Salvador had stuck with, because they did walk back a bit that adoption, right? Um, that could have created a potential on-off ramp for bad actors to move large sums much more easily than they can currently. So I think that's on the risk side. You may lose access to IMF funding. You may be cut off by international banks who just deem everything related to El Salvador too risky. And all the El Salvador diaspora here in the United States, there's a lot of people from El Salvador here in the US, can't send money easily back to El Salvador now. They're here working to earn money for their families. Guess what? Those bridges, those remittance corridors can be shut down because of cryptocurrency adoption. However, when you dollarize like El Salvador has, you are now adopting the Federal Reserve's monetary policy. And that means whatever the Fed does and Jerome Powell does is going to have a huge influence on your economy. And so there is a very good reason for countries like El Salvador to look to diversify, perhaps by adopting cryptocurrency away from the US dollar. Um, the politics of the United States, not everyone agrees with it. And I get that. Boy, do I get that. um, you know, having a little more independence politically, not just economically, not just from a monetary policy perspective, also can be attractive, right? And so I do think there's some potential sovereignty benefits by diversifying away from the US dollar if you've dollarized like many countries have. I think roughly 10 or so countries around the world have dollarized. Some of them, sometimes it happens more unofficially than officially, by the way. Um, I'll just give you a funny example of that. It's not the dollar, it's actually Montenegro in Europe has adopted the euro, but they never got the European Central Bank's approval to do so. It's something that just kind of like they did. And it's kind of in this interesting gray area of like, well, it's not officially endorsed by the ECB is okay, and yet it's happened. And it's kind of a funny kind of monetary case study in spontaneous or unofficial adoption, I guess would be the better way to put it. Okay. Thank you, Paul, for the question. Very interesting question. We can spend a lot of time on that. And really it gets to, I think, um, where this all could go, right? Like, are there more risks or benefits, um, to adopting crypto? And it's highly debatable, right? And it can, like we talked about, Bhutan seems to be walking back. They never came out and publicly trumpeted, to my knowledge, that they held a lot of Bitcoin, which they mined using their energy resources. Um, and I've only seen on-chain analysis about their selling their currency. So I don't know more than that, right? It's not something they've been out publicly talking about like Bukele has in El Salvador, who's been much more, I think, happy to share, um, his views on why others should follow. So that's one of the fun things about being a Bitcoiner, right? Is once you become a Bitcoiner, you got to get other people to be a Bitcoiner. You become that guy at the party who only wants to talk about Bitcoin. God, he's so annoying. But that's partly what we Bitcoiners do, right? We try to convince other people, orange pill them on Bitcoin. Not everyone likes that, by the way. It's one of the things that socially makes Bitcoin, um, I think, a bit of a downer for some folks who don't want to always be sold on something. Okay, Samita, next question. Is Bitcoin really dependent on geopolitics? Well, that's a great another you guys are asking the great questions again. Is it dependent? I mean, I think I need to understand a little more what you mean by dependent. Can it be influenced by geopolitics? Undeniably. I mean, the fact that Trump embraced Bitcoin, I think, was the big reason it went over $100,000 for the first time. But the fact that Trump has embraced Bitcoin and his family is profiting mightily off of it may be part of the reason the price is, plummeted as well, right? Um, we'll see. So it's definitely influenced by geopolitics. I think from the early days, I started going to crypto conferences back in 2013. You know, there was a real awareness early on, particularly from the venture capitalists, I would say, but even the original cypherpunky Bitcoiners, um, that regulators would have a huge influence on the shape and trajectory of this industry and whether it gets adopted or not. So regulation to me is a part of geopolitics, but it's not, the whole story of geopolitics. So government is a huge player in this. Um, but I think you know, I don't think the story of crypto can be, you know, I don't think it's a make or break kind of like player, government, geopolitics. Um, it's something that needs more to drive it in a pro adoption per direction or kind of in a less widely adopted direction. On the pro side, it's got to be technically compelling, right? What is it offering that we can't get with our existing financial assets and financial services? Is it faster, better, cheaper? Does it have more privacy, right? What does it offer on the technical side? Um, do people care about the ethos, the mission, the fact that maybe this is a more private focused way to transact? A lot of people don't care about privacy. It's pretty shocking how you know how I mean, yeah, it's one of the things that just continually kind of blows me away is just how so many people don't really care about privacy, and maybe that's because they feel powerless to do anything about it still. It is harder to remain private, protect your privacy in this world. It requires extra work, and many people just don't have that luxury. I think is part of the answer for why privacy is undervalued or prioritized less, and to me it should be. Um, but that's a key question here as well. Is privacy really going to be enough to get people to spend more time on this? We'll see. Okay, thanks for the question, Sunita. Diego, Bitcoin is often described as borderless and independent from state control, yet its security depends on energy intensive mining tied to electricity grids, physical infrastructure, global energy markets, and a conflict that threatens oil flows, such as the tensions around the Strait of Hormuz. Does that reliance make Bitcoin more geopolitically exposed than it is often portrayed, to what extent does this energy dependence constrain the idea that Bitcoin operates outside of the state of power? Boy, another great question. So I have to agree with you, Diego, that because of how geopolitically important energy is, and even if, very little Bitcoin mining is happening with natural gas, I mean, there's flared gas Bitcoin mining going on to a degree, um, in oil, right? It's driven more by, I mean, in China, it was, both hydro and coal that were, as I understood it, the two primary energy sources. We see in Texas today, one of the big Bitcoin mining capitals, a lot of like uh, low cost or even free wind and solar sometimes powering Bitcoin mining, or whatever is driving electricity grids, which is can be natural gas, but natural gas is very, it's not like as local or sorry, as international a priced market as oil is. And I don't know about a lot of, I don't know that there's a lot of Bitcoin mining happening with, um, oil, petroleum products, and so on. We do see a lot of the grid powered by natural gas, though. But again, how much Bitcoin mining is happening in the Middle East historically has not been a top location for Bitcoin mining for various reasons. Um, I think we've seen certainly some, including in Iran. Iran, we saw historically some Bitcoin mining happening there. It was always really tricky to figure out how much was going on there. But it's been China originally and the US now that are really the dominant players in Bitcoin mining. And neither of those grids, as I understand them, are powered by Middle Eastern energy products, right? The US has abundant natural gas um, resources, and natural gas tends to, again, kind of like be distributed and trade more locally. That's why you see huge price differences in natural gas markets between, say, Europe, where it's gotten quite high, which is more dependent on Middle Eastern natural gas, versus the US. And then very little oil used to mine Bitcoin. So I do think what happens in energy markets matters, but not as much so as it would if you had, say, a lot of Bitcoin mining happening in the Middle East using Middle Eastern natural gas. And to my knowledge, that's not really the state of play today. Richard, is cryptocurrency a disruptor or enabler in the financial sector? I mean, the short answer is I'd say probably both. But stable coins, is it even crypto, right? I mean, the banks are not really happy about stable coins being able to offer interest on, stables, so they're kind of like fighting stable coins a bit. But should they be? I don't know. Bitcoin, I mean, certainly enabled BlackRock, Fidelity, other companies to make a lot of money. The BlackRock Bitcoin ETF has been one of the most successful, if not the most successful ETFs in history in terms of the profits and how quickly it grew to be a large ETF. So, I think the dream that somehow crypto and DeFi would totally totally disrupt traditional financial services has not come to pass yet, at least. Um, and a lot of what happens in DeFi, like money market protocols, kind of like these automated markets and whatnot, it's not like you need a blockchain for that kind of thing. There's advantages from a trust minimization of running these DeFi protocols on top of and smart contracts on top of trust minimized blockchains like Ethereum, but you don't need a blockchain to operate something kind of like the compound protocol in DeFi. It just makes it more trust minimized. That's it. Um, so I don't know how disruptive a lot of DeFi really is, to be honest. Um, and you know like I mentioned in my prepared slides, what's really radical, what really ticks that disruptor button is something moving into the payments and currency arena. When you think about the two primary um, axes of government power, right? What are they? They're the legal monopoly on violence, right? Right to declare war, in countries that um, have the death penalty to put you to death and so on and so forth. So the legal monopoly on violence is one of the key axes of government power, and the other is the power to print the coin of the realm and to govern monetary policy and manage money. Um, and crypto was supposed to disrupt this latter, um, kind of capability, but it doesn't really do that. It's just digital gold, or it's just an asset. It needs to become a means of payment, a currency, or it's really not that radical. It's just another investment product. You know, it's like a tech stock. How radical is a tech stock? How disruptive? Tech companies can be disruptive, but they're not fundamentally re-architecting the world as we know it in the way that something like the Protestant Reformation did, right? That was disruptive in a way that was far, far greater, arguably, the Lutheran, Protestant Reformation, much more disruptive than I'd say crypto's been so far. Okay, Jorgen, three questions. Oh boy, let me just quickly scan through these to see if one of these jumps out as easier to tackle than the others. Yeah, I mean, I think on your first question about cryptocurrencies replacing national currencies, tried to touch on that. I mean, that could be huge, right? It doesn't mean that countries can't collect taxes. I think that was one of the big concerns. What if we adopt Bitcoin as a currency or something like that? Is the government still going to be able to tax crypto? No, no, you can have smart contracts, automating tax collection. There's ways to, I think, actually have more effective tax regimes in a more digitized, even crypto economy. But you may not have as much monetary policy control. And maybe that's a good thing, by the way. A lot of economists, Milton Friedman famously, for example, felt like central banks should just be replaced with a computer. And this should all be automated and algorithmically driven, and less kind of like human management of things like monetary policy, growth of the money supply, and so on and so forth. Um, so, that's maybe one thing that reduces power, but it may, in the mind of someone like Milton Friedman, make the economy more efficient and fair. Um, should governments regulate crypto, um, even if it limits financial freedom? Look, I think the reality is governments. My view on this kind of like tried to like not get into should they or shouldn't they. My feeling on crypto was that if it became important, and it certainly has, it's going to get regulated. It just is. That's just the world as it is, not the world we wish it should be. Whether it should be regulated or not is a political question. I try not to get, too political and give you too many of my opinions in these sessions, but I think it's just the nature of the world that things that become important tend to get regulated, right? Like it or not. Should it be considered an innovation or a threat to the global order if sanctioned country uses crypto to bypass financial restrictions? Certainly, yeah. Of course, it's going to be considered a threat by the global order if sanctioned countries are using crypto. Um, we talked about the case of North Korea. North Korea has a nuclear weapon, unlike Iran, and there's reasons to think that that program was financed through their hacking crypto, hacking all these South Korean exchanges, Japanese exchanges, and so on. Um, you know, we haven't seen a major incident, to my knowledge, yet that was financed with crypto, hacked proceeds or financed in some way by crypto. Maybe it's happened, maybe it hasn't. We're not aware of one. I guarantee that if that does happen, if there's a major, like terrorist incident or bioweapon or nuclear threat that somehow is connected to crypto, um, the whole existence of this industry will be relitigated and debated yet again. All right. It's definitely a risk factor. And to think it's not, I think you're fooling yourself. Okay, Anastasios, is Bitcoin really dependent on geopolitics given that its global distribution enables geographical arbitrage? Assuming a geopolitical shift, so it looks like maybe three questions here. An asset of fear. Well, I think we talked about how regulation certainly influences Bitcoin. Um, so in that sense, it may not be dependent on geopolitics, but it certainly is influenced by it. Certainly, like I said, the price and legitimacy arguably gained, you know, in a major way under the Trump administration, right? So is it dependent? No. Bitcoin was doing fine. Actually, did much better under the Biden administration than it has done under Trump, right? Um, Even as hostile as the Biden administration was, Bitcoin's prices plummeted since Trump became president, right? That's a fact. We'll see what happens. He's only a year and change into his second term, but Bitcoin did just fine under, you know, um, the Biden administration and in more hostile government regimes. So this notion of exit that you're talking about here, like if currencies get debased and people exit into Bitcoin, um, I look, I think that's absolutely possible and would seem attractive, right? That people can protect themselves. They do that already, right? Like people, in Argentina have long used the US dollar, for example, to exit the peso. And I certainly do not fault or criticize anyone who's looking after their own financial well-being, their interests by exiting into something like, say, the US dollar to protect yourself from, a failing local currency, right? Having said that, there is a kind of darker scenario where there's a mass exit from national currencies into something else that creates or exacerbates a major financial crisis, leads to a global depression, leads to things like the rise of people like Adolf Hitler, and leads to things like World War II. So financial collapse absolutely and hyperinflation can trigger really bad things politically. And it's something you have to kind of always kind of keep in mind. When people go out and talk about hyper Bitcoinization, for example, to me, hyper Bitcoinization sounds like a mass exit, quick and sudden into Bitcoin from, say, the US dollar or other national currencies. And that stampede effect, that bank run, if you will, on a global currency like the dollar could create a 1930s type situation, which could be really, really negative, and have real life or death consequences for millions of people potentially, right? That degree of financial and economic collapse, which very few people alive today remember because it was so long ago. And that's always dangerous because when people forget things like the Great Depression, I feel like, they don't have the lived experience. They're more likely to repeat those historical events than people who have the lived experience, remember World War II, remember the Great Depression, know how important it is to avoid ever experiencing anything like that again. But you do have to worry about this hyper Bitcoinization. I think hyper Bitcoinization would be potentially one of the fastest ways to kill Bitcoin because the change would be too sudden that society couldn't handle it. And the backlash against Bitcoin would be so severe that it may lead to its effective, you know, ban, um, or really, really reduced. So for the Bitcoin bulls out there, I think hoping for something more like the kettle that slowly boils the frog, so the frog just kind of warms up slowly and doesn't like jump from the kettle of water. That's kind of a better long game um, strategy if you're rooting for Bitcoin to take over. Not this hyper sudden Bitcoinization. Be a bit more patient, I would say to my Bitcoin friends. Slowly boil that frog. Don't root for hyper Bitcoinization. That's a good way to actually get killed. And yeah, the asset of fear thing that Larry Fink talks about, I do think um, this is something I've observed as well in 10 plus years of researching and teaching this topic, is that, a lot of people get turned off though when you're trying to sell them something that is fundamentally driven by fear. Like, you should like this because you should be afraid. Most people aren't excited about that, right? Yeah, people get scared, but a lot of times when people get afraid, they run away. They don't actually take action. They kind of get paralyzed. And so trying to market Bitcoin as this safe haven for if you're afraid, I think that can work with some people, but a lot of people just tune out and get paralyzed and don't want to hear it. They don't want to be scared. We all used to be children. Uh, you know, Children don't like to be afraid, right? They want to hear a happy, positive story with a happy ending. Um, I'm just going to check time here real quick. We've got some more time. Okay, question on AML, an adoption curve, stress points. Well, I think your premise here is cryptocurrencies gain adoption. Yes, they've been gaining adoption. Over 100 million people probably own crypto or have at least, and begin to function more like money. I mean, have they? I mean, we've seen a cumulative increase over time in the number of goods and services purchased with crypto. But honestly, the early days of Bitcoin, it looked more like money, I would say, than it does today, with its use on marketplaces like the Silk Road and so on. I think it's actually become, on a percentage basis, less like money, less like a cryptocurrency, more like a crypto asset over time. All right, but let's put that point aside. Do fiat on and off ramps become the primary control points for detecting illicit activity? In this context, how are financial crime investigations evolving, particularly with like groups like Lazarus Group and so on? I think certainly the on and off ramps are not only choke points, but key kind of nodes in kind of AML, anti-money laundering, crypto surveillance of bad actors, and so on and so forth. But the on-chain tools have also gotten incredibly sophisticated. So much so, actually, that Chamath Palihapitiya, who's a Silicon Valley VC here in the San Francisco Bay Area, I saw him on a Dubai. He was on that same Dubai business class flight last month, getting out of Dubai just before the bombs started launching. He was out in Dubai when I was there as well at a conference, and he talked about he doesn't think that central banks are ever going to adopt Bitcoin because of how public the blockchain is. The fact that on-chain analytics could allow others to effectively see your position too easily. And that's going to be a problem for central banks that are concerned about, the monitoring of their reserves, changes in their reserves, how they're settling transactions, and so on and so forth. So, it's not just the exchanges that are useful for policing money laundering and so on. I mean, the on-chain tools have gotten really, really good. Um, and, if you talk to the real propeller heads who really focus on the privacy features of Bitcoin and how you can use Lightning and various ways to try to conceal activity, you know, you have to be very careful and take a lot of precautions really to um, have robust privacy with Bitcoin. My view and my feeling is that it's still possible, but it's also easy to make mistakes and do things that, reveal a pattern or identify yourself or so on and so forth. So um, that's something to think about as well, with regards to Bitcoin and why there is an argument that privacy enhanced cryptos, or as the Justice Department labeled them, anonymity enhanced cryptos, AECs, which, Zcash, Monero, etc., were not auctioned back to the public historically, right? So Bitcoin has been auctioned, it's been sold back, but Zcash and Monero are treated more like heroin. The US government, when it seizes Zcash and Monero, does not sell it back to the public like it does Bitcoin. But having said that, I think there is an argument that more privacy enhanced cryptos, if you buy Chamath's argument, and I'm not sure I do, by the way, I think it's an interesting point, but it's not one that I'm sold on. Um, I I think there's an argument that privacy enhancement, either to Bitcoin or privacy enhanced cryptocurrencies, could have a greater future than they do at present, given the concerns around the lack of privacy related to Bitcoin. Right. In fact, um, Andreas, can we run a quick poll just to not only to get some feedback from the students, but to check the pulse
Of
on everyone?
course.
It's been awfully quiet. I want to ask this group whether they think Bitcoin has enough privacy to continue to be the number one crypto. So you would
Nice
say no
question.
to that if you think Bitcoin needs more privacy. You would say yes, I think it does have enough privacy to be number one if you think the privacy issue is a non-factor or not the key to why Bitcoin might not remain number one. So does Bitcoin have sufficient privacy to continue to be number one in crypto land?
Great. I think it has launched.
I see it. Thank you.
Yeah, great.
Okay, we'll just leave that up for a minute while I keep going. So I know we're getting close on time here. Remember, don't just talk your book. Tell us your honest view here. If you're long Bitcoin, that's great. If you're not long Bitcoin, that's great too. Don't let your financial choices influence your intellectual honesty, right? Um, okay, next question. What can FATF, the Financial Action Force, effectively address geopolitical risks in crypto? Ransomware and proliferation financing. Yeah, so I think the financing is a geopolitical risk. Ransomware is, I mean, if you were attacking critical infrastructure with ransomware, I think yes, that's a geopolitical risk. I think regulation can play a role in tackling, threat financing and ransomware. No question. These are not non-issues. When you've got hospitals that are having to cancel surgeries, like happened in the UK a few years ago, due to computer systems getting shut down. I mean, that's a tragedy on a human level, but it's also really bad for Bitcoin, for crypto to be used in such a way. Um, you know, uh, like I said, if there's a big enough terrorist attack or a nuke goes off or a bioweapons release and we find that it was somehow connected to funding from crypto, that's a big problem. I mean, it's an existential threat to this whole industry, potentially. And to say otherwise is, someone's not being intellectually honest if they just hand wave that away as a non-issue. All right, Andreas, how did the poll go? Are we good?
Yeah, launching it right now. Ending, actually. Yeah.
Bitcoin, yes, does have enough privacy, sufficient to be number one. 61%. All right. But close. We're asking the right questions today. That's what that tells me. Yeah. And how much privacy does Bitcoin have relative to other cryptos is highly debatable, by the way, right? We don't always know what tools uh, the quote unquote good guys have to de-anonymize, various things. You know, were you there for the signing ceremony for Zcash? I wasn't. I'm good friends with Zuko Wilcox. I trust Zuko. Peter Todd, a rumored Satoshi Nakamoto was part of that ceremony as well. But can you, with certainty, say that that the secrets that were necessary to be destroyed were done so properly? Um, there's a lot of questions around how private are these private cryptocurrencies. Um, I mean, I'll tell you this. Um, Peter Woolley, who's the most prolific Bitcoin developer in history after Satoshi, once, with a wistful look in his eye, told me, but that, you know what? If he could start Bitcoin over from scratch, he would have built it with the Mimblewimble protocol. Um, and he felt furthermore that it's just too much to try to convert Bitcoin to the Mimblewimble protocol like Grin, which where is that now? Grin's like the Spinal Tap of crypto, right? It's like ranked 2000. It's like the where are they now crypto. I mean, Silicon Valley invested $100 million in pre-mining Grin or mining or Grin early on. Was super bullish on it. Um, you know, and you know, there's questions about how private these are, how to make them really usable. If you're familiar with Zcash, there's the shielded and unshielded transactions. Most of Zcash use is actually unshielded, non-privacy focused. So again, people don't always care about privacy, even with privacy enhanced cryptocurrencies, all that much, it seems. But hugely interesting topic, and I think something that I would keep a close eye on. I think it's still one of the more interesting kind of areas in crypto is the whole privacy enhancements and how private is too private or not private enough, right? Like one of the reasons maybe Bitcoin achieved the success it has, especially with Wall Street getting comfortable with it, is because it is more transparent. It is less private than maybe a Monero, for example, right? That's maybe one of the keys to its success. Like too much privacy and the whole Bitcoin phenomenon never happens. It never becomes a multi-trillion-dollar asset. All right, Aislinn, considering that Bitcoin is a global and apolitical asset by nature, well, apolitical, huh? um, I mean, I reacted there because, look, Bitcoin emerges from the cypherpunk movement. You've got people like David Chaum, Adam Back, Hal Finney, others who care a lot about privacy. Privacy is a political issue. The cypherpunk manifesto that Eric Hughes wrote in the 1990s gets into the differences of secrecy and privacy and the politics of privacy. I wouldn't call it apolitical. I know what you mean by that, though. I think you're thinking more about, denationalized or, it's not um, controlled by a nation state. Just Michael Saylor, right? He's running the show these days with his coming up on close to 1 million Bitcoin Satoshi level stash. And oh, by the way, Michael, if you're listening, when are you going to stop buying? You're making this thing actually less valuable the more and more the ownership of it gets concentrated into a handful of institutions and individuals. Just a side note there. But anyway, how do you perceive the reaction of global powers to the risk of digital de-dollarization? Will Bitcoin serve as a tool for neutrality for smaller nations or merely as a new battlefield for the hedge money of fiat currencies? Well, very well written question. I really like the colorful language there. that was employed. Um, so I mean, yeah, everyone thinks that, China wants to dethrone the dollar or, the powers around the world would love to see, Trump eat pie and the dollar to go down in flames. That's not necessarily the whole story, though. Um, First of all, a lot of countries like China, like the Middle Eastern countries, Japan, Europe, etc., they actually own a lot of dollar denominated assets. Um, so de-dollarization is going to be painful financially if you aren't hedged or are holding the bag, so to speak. The other thing is when the dollar is the dominant reserve currency, there is a premium on the dollar's exchange rate that makes U.S. exports more expensive, right? So this is a key part of the story of the rise of Japan and China and the Asian tigers and so on. They've benefited by having arguably an overvalued dollar as the dominant currency to compete against. And we've seen the hollowing out of U.S. manufacturing and U.S. exports becoming less and less competitive since World War II, when the U.S. was the dominant export economy, in part because it was intact. It hadn't been destroyed like most of Europe and other parts of the world. So the manufacturing base was intact and could build and export. But a dollar dominant world is one where it's a lot easier to export your products and services into the US than one where the dollar is less dominant. Um, so that's one point I would make on that question is that not everyone's rooting fully, at least, for a de-dollarized world. Um, is Bitcoin going to serve as a tool for neutrality? Well, I mean, look at Bitcoin today. We talked about Michael Saylor with his almost 1 million Bitcoins. Satoshi owning maybe a million Bitcoins. If those don't get recycled in the name of reducing quantum attack risk to the Satoshi stash, the Satoshi wallet, we'll see what happens there. U.S. government has maybe a few 100,000 bitcoins. We still don't know for sure. David Sachs, are you listening? We're still waiting for the tally. How many bitcoins does the U.S. have? You're a year plus into this, and we still don't know. They're still trying to find them. They've been kind of like misplaced, or yeah, that's a whole nother another topic, isn't it? Anyway, as you get Bitcoin more and more concentrated into the hands of fewer and fewer big players, BlackRock, with its big stash, in the ETF, Coinbase offering custody services for, you know, who knows how many Bitcoins. Um, how neutral is Bitcoin is the question I would put back to you. Um, partly what makes it neutral is I think, the dispersion of ownership of it. But when you've got a few players controlling a lot of the supply, it's not as neutral as it used to be. It's way more concentrated than it's ever been, and this risk does not get discussed nearly enough in my view. So that's the other thing I would push back on there with your question. Um, I think it's becoming arguably less and less neutral, is I guess the bottom line, and more tightly associated with certain institutions and countries, meaning it has less of a chance to be a neutral digital asset or currency, like a Switzerland, so to speak, uh, that countries can adopt. And I think that's partly the story behind why gold's done so well in the last 12 months. I think the US going so strongly, Trump going so strongly in favor of crypto probably helped gold, frankly, in the eyes of countries like China and elsewhere. Um, you know, if the US is going to dominate the mining and ownership of Bitcoin, then if you're China, why would you want to own it? Right? Ganapathy. As state-backed digital currencies and private stablecoins emerge, who ultimately wins the currency war? The state with the most powerful CBDC or the global corporation with the most widely adopted stablecoin? Well, this is the multi-trillion dollar question, isn't it? Um, who is going to win? Well, this class thinks the US dollar is going to win, or at least half of it does, over at least the next, the foreseeable future, 10 years. In which case, the status quo reigns and the dollar is dominant. And there's good arguments. We've talked about those US dollar dominance of stablecoins greater than reserve and international trade dominance. Um, so, that's one scenario. Um, you know, what economic historians like Barry Eichengreen will tell you is that usually, you know, dominant currencies follow dominant trading powers. So if you are a country like China that is a huge economy and exports and trades in a massive way with the rest of the world, that's often the path towards your currency, the renminbi, becoming much more important as an international currency, a reserve currency, and so on and so forth. So it's a very trade led kind of way in which currencies rise to power. And so that's why I wanted to contrast kind of that traditional historical approach with this new digital economy, machine to machine economy, the rise of AI, and so on, perhaps machines transacting with other machines, us getting more of our services from this machine economy as kind of a potential new twist in the story of what could rise to become the winning international currency or a new global currency, right? It may not just be a nation state story, it could be a whole new category of economic activity that is explaining how the next great currency rises into existence. And maybe that currency exists today. Maybe it's Bitcoin. Maybe it's something that one of you will invent. Maybe it's a stable coin. Maybe it's a more algorithmic stable coin that is a true crypto because it's not held. The reserves aren't held in the banking system like U.S. dollar stable coins are, and to me are more fintech-y. Um, we shall see, right? That's the fun here of this debate. I think, when I think about Bitcoin's potential to rise as a currency, it's got one big fundamental challenge it needs to kind of figure out, which is, Gresham's law. Bitcoin is so scarce, right? Even gold is more plentiful. And as the price of gold goes up, people dig deeper and bring more supply to market, right? Which then depresses the price. And nothing like that happens for Bitcoin because of its finite supply, which means that people have a tendency to want to hoard it. They don't want to spend their Bitcoins because it's so scarce. So if you don't want to spend something because it's scarcer than anything else in history, arguably, then it's going to have a hard time getting traction as a currency. And that's what Gresham's law pointed out that, bad money drives out good money. It's counterintuitive, right? You think, wait a minute, what's bad money doing? How's it out competing good money? Well, the reason why Gresham pointed that out was that the things that inflate away their purchasing power, like the US dollar, are what you want to spend. You don't want to spend the good money, the gold or the Bitcoin that's scarcer and preserves its purchasing power. It's the bad money, the pesos, the euro, the dollar that people want to spend. And that inflationary nature actually helps them keep their stranglehold on the payment system. So that's something that doesn't get talked about enough in crypto amongst the proponents who'd like to see something like Bitcoin or some other unbacked, neutral, digital, blockchain based token achieve greater use as a means of payment. All right. Gabriella, I'm so sorry. We've run out of time. You've got a lot of questions there. I hope this was useful. It's always a pleasure. Great questions again, everyone. And stay in touch on LinkedIn. Shoot me an email. If you're working on something interesting, I always love hearing about it. And I wish you all the best of luck in your crypto journey. Thank you.
Thank you, Professor. Thank you very much.
Thank you.